just about 8 minutes left, it looks like there's absolutely no nervousness. In fact, if you pull out some of the European markets, I think FTSE is now inching back a bit again, and a couple of other European markets. That would be interesting actually to pull out at this point in time to see the kind of reaction that we are seeing in a couple of these global markets. Yes, in fact, the markets are inching up now. The CAC, the DAX, and the FTSE are up quite a bit, already trading at high point of the day, and that's the Dow futures. So the market going into the event with the belief that the worst is over and the market may have found a bottom. Funny, would that be a call that you would take as well, that the worst is over for the time being?
Well, it's a reasonable call as long as the Fed rate hike is within the range of expectations. You might very well see a relief rally, more so in some of the interest rate sensitives. However, it doesn't mean that they start outperforming. But in the very near term, and the kind of underperformance that you have seen in sectors such as, say, private sector banking or NBFCs might reverse, and you might see bounce back in them if the Fed rate hike event is behind us. And over the medium term, of course, the focus will be back to corporate earnings growth, whose fate for the next financial year will be known in the next 6 to 9 months.
Okay, so for somebody who's looking out to perhaps nibble into this market now, Funny, what are the top 2 or 3 mid-cap or even non-index large caps that you're recommending to buy now?
Well, it's a fantastic time to keep buying, Sonia, because history is on your side, and it's not it's pretty recent history. Anyone who bought into the uncertainty of 2012 or 13 is still making money today, compared to somebody who bought the cheery consensus of 2014 and 15. So I will not be commenting on names, but you know, over a period of time, if you start buying into some of these defensives as of today, and on deeper declines, some of the well-run private sector banks or NBFCs, I think over a period of 1.5 to 2 years, you will certainly make outsized returns.
Okay. Ms. Tulsian, from the broader market, anything that you would want to recommend, maybe as BTST or a slightly longer-term call?
2 stocks comes to my mind. One is Glenmark and second is Bharat Forge. In fact, Voltas also looks quite attractive. But if you see Voltas, Anuj, you know, it has moved from 253 one way. In last maybe 1 month, the stock has moved from 253 to 307. And I think that this movement is likely to get extended maybe till expiry as well. I won't be surprised to see, but it is difficult to give a call as BTST or maybe for a limited period of couple of days. But otherwise, Glenmark and Bharat Forge looks good for next couple of days.
Okay. Sudarshan, you already gave us BTST ideas, but from the index, any stock where you would be most comfortable taking a long position even ahead of the event?
Yes, fortunately I could name a few, and I'll do that. One is Hind Levered. I would be comfortable taking a long position in Levered. An event is not an important part of it in the current scenario for the next few days. And the second is Sun Pharma. And the third is an old favorite, Reliance. We talked about oil and gas, and Reliance slipped my mind. Reliance is now poised at a point where a good gain could come in. Now, the event can change everything, so that caveat is always there. But Sun Pharma, Lever and Reliance are all opportunities.
But will the event change everything, Sudarshan? That's the question, right? I mean, if this turns out to be a non-event, if in case tomorrow the Fed rate hike comes through and the market continues, you know, with business as usual, then how do you see the December series end? Because we're still in a downtrend, right?
We are in a downtrend. We just want to know how long this upswing continues. For all I know, it could continue through December, and January could be disturbing. So there is no way to time it. So far as we are in a short, brief uptrend, we'll be long.
Okay. You know, Sonia, what will be interesting is post the Fed rate hike, after 1 week, FIs will go on holiday, and they have been the ones which have been selling. So as we discussed in taking stock over the weekend with Ratnesh, in a perverse way, that could help the market. So that's something that, you know, maybe we'll be watching out for. But tomorrow, of course, is the all-important day when we have the Fed decision. My sense is that the market will react for a bit. Even if it's for 1 hour or 2 hours, there should be some reaction. And after that, maybe the market settles down. But for tomorrow, at least the first hour or so, there should be some reaction in the market.
Actually, that's a very important point you made, Anuj. With the FIs going on leave and, you know, as they say, when the cat is away, the mice are at play, you could just see domestic investors come back in maybe not in a very big way, but that could just fuel the short covering rally a little more.
The only problem with that caveat is, Sonia, that who have the DIs been buying from? The FIs. You know, like they have been giving us the supply of the stocks that they wanted to buy. And the sell orders from FIs have been at market rates, and the buy orders from DIs generally are at their prices. So that's again something, the volumes will dry up, so even if the DIs buy. So that's something that we'll keep an eye on. But just about 2 minutes left for today's trade. So the market not ending at high point of the day, but very close to high point of the day. So that's telling you that the market believes that it's comfortable taking on the Fed event, and tomorrow morning the bulls believe that they should have some more going for them. Let's talk about the stocks then, which led the market higher in today's trade. ICICI Bank was the top contributor, up about close to 3%. Infosys was a close second. That stock was up about 1.5%. So these two stocks really batted for bulls. Apart from that, you had Bharti Airtel up 4%, ONGC was up 4%, Ken was up about close to 3%. Then there was some traction in stocks like Lupin. In fact, for Lupin, last 2 days have been good. And today also the stock was up about 2%. Sun Pharma as well was up 1.5%. TCS was up about 1.5%. And Hero MotoCorp was up about 1%. On the losing side, clearly Mahindra & Mahindra down about 5%. So that big blow from Supreme Court clearly hurting the stock. Asian Paint was down 1.5%. And ITC, interestingly, was down about 1%. So that's the large cap action. The mid caps underperformed today as an index, but still there were big winners in trade today.
All right, yes there were. So the index was up about 0.3%, but look at some of these stocks. Pipavav Defence up 17% today. Praj Industries up almost about 14%. IGL up 6.5%. All of these stocks were in the news. JP Associates up about 5% You had Relcom that was up about 2% on top of the gains that it made yesterday. And a couple of these sugar stocks were in the green as well. On the downside, RCF is down about 8.5%. Subex, Bajaj Hindustan, Manappuram General Finance and Suzlon were all in the red. So all of those stocks going home with losses of anywhere between 2 to about 8%. So not bad for the markets. We close in the green. We've come off the day's highs, but it's the third day running now that our markets have closed in the green. So it's been quite a powerful short covering rally ahead of the Fed event. Just to take one look at what the global markets are suggesting before we close for trade. We've had a great run for most of the Asian markets today, and some of the European markets like the CAC are holding up in the green as well, up almost about 0.5% or so. So we come to the end of trade, 77.51 on the Nifty, and the Bank Nifty goes home with big gains, up about more than 1%. Mr. Tulsian, just wanted to ask you about that IPO that opens tomorrow, Narayana Health. We've been talking about how expensive it is, but you know, even Indigo was a very expensive IPO. We saw how that went through. What would your recommendation be?
See, actually, Sonia, in case of Indigo, the concept or the idea or the theme was different. That if you have the listed peers available and they are ruling much cheaper, I have never said that Indigo, but you know, at that point of time, and if you see the appreciation on a relative gain post the listing of Indigo and the other two aviation stocks, the other two aviation stocks have given you higher return.
Yeah.
Now coming on the Narayana Hrudayalaya, if you see the IPO, it is coming at a EV to EBITDA multiple of 28, 29, while the Apollo Hospital is available at a at EV to EBITDA multiple of 26. Come on the bottom line, EPS up to for FY15 was negative. For FY16, it is not likely to be more than 2 rupees. And you are come on the enterprise value, 5,400 crore, 5,100 crore will be the market cap at the issue price. Then you need to, there is unwritten law that you need to leave something on the table for the IPO allottees. You just can't have the secondary market. That means we are all capturing the secondary market comparison of Apollo Hospital with the IPO valuations. And thirdly, if you see
generally, you know, I mean, I'm sorry to interrupt you, but generally some of these strong promoters are given a premium in many of these companies. So because it's promoted by Devi Shetty and he has strong credibility, don't you expect the
But see, Sonia, again, come on that point, you know, take a different view that, you know, it is a person-centric again, you know. What has happened, I don't want to name the doctors, you know, which are seen in the past, you know, Neetu Mandke and all that. What has happened? It's a person-centric, and that is never liked by I don't want to narrate the instances, you know, where the Birlas in about maybe 40 years back sacked the president because he has not created the second line. Let's not come on those things, but come on the margin. Even the margin is 11% against 13 and 13.5% of Apollo. The moment the stock will get listed, the comparison with the comparable peers will start. They have a bed of about 5,500, which will get ramped up to 6,200. Apollo Hospital has 9,500. I'm not comparing this company with Fortis Health. So I honestly, I have respect for Dr. Devi Shetty. But if you really want to, it's a ruthless game of valuing the companies.
Yeah.
Where there the sentiments will not prevail. So taking call and making comparison with Apollo Hospital, as I said, EPS, that is going to disappoint. You will be having a PAT of 15 crore for FY16. 25 crore, because 12.5 crore is the PAT in first half on an equity of 204 crore. So those things are not going to get liked by the. You have given an example of Indigo. One could take the case of Cafe Coffee Day also. That has disappointed the market. Even there were the savvy investors and all that. The people started comparing it with the Jubilant Food and all that. That did not cheer the market. So one cannot generalize that okay, the stock IPO is looking expensive, but it will perform well on the secondary market. So these are my views on the IPO. Yeah.
Okay, having spoken about a couple of these new issues, Funny, what about, how should one approach Indigo? I mean, this is one stock where, it continues to defy the stated logic of not buying expensive stocks. It keeps getting more expensive, but at the same time, there's the issue of low floating stock. So how do you approach Indigo and maybe even other aviation stocks like Jet Airways and SpiceJet?
Well, to begin with, Anuj, one has to differentiate Indigo from others. So Indigo is in different league simply because its business model is a very long-term one, something that cannot be replicated easily by the existing players. So Indigo definitely has that competitive advantage. Now, how much valuation premium do you pay for that competitive advantage is a function of all the factors that you mentioned, which is A, low floating stock, B, it's the only the most healthy company that is available for you in a sunrise sector like aviation, a sector that has traditionally given a better experience to investors. In the current context, you have two favorable factors going for aviation. One is oil prices at around $36, a decade low. And more importantly, this is the peak of the tourist season. So I guess all these factors are propelling Indigo to new highs. Having said that, I would like to believe that while Indigo incrementally may not be a major wealth creator, but at the same time, I would certainly consider that it would continue to get a valuation premium over its other peers. And to that extent, I guess it would continue to remain an institutional favorite, but may not be an ideal stock for retail investors.
All right.